Hey team. Firstly, thank you for those who managed to tune into my session last week around the power of 1%. I hope you found it useful. If you haven't seen it, I've posted a link to it in the comments section, so feel free to head along and have a look when you get a chance. But today I wanted to look at the Business 101 cycle. And the reason for this is because we as business owners get into business not because we're good at running businesses necessarily, but because we're good at something, whether it be a skill or whether it be that we're passionate about something. And the business acumen side of things, we kind of just have to figure out as we go along. But unless we truly understand how a business operates, how are we supposed to identify where things might be going wrong and fix those problems? So that's where the Business 101 cycle strips it back to basics and identifies areas where there might be possibly things not working. So today what I'm going to do is I'm going to look at the system or the cycle as a whole. And then over the next few weeks, I'm going to dig a little deeper into each of the areas so that we can possibly identify some things that might need to be worked on in your business. First things first, we start out with an investment into the business. Now, for some businesses, we might be fortunate enough that we can get some lending from the bank, or there might be some other shareholders who are wanting to invest capital into the business. But in most cases, it's, especially in small businesses, it's the owner. And that is essentially what we call introduced capital. So we take that capital and we generate income. Now, this is the part where most of us are pretty good at, because this is where we actually generate or provide a service or create a good, which we then sell to our customers. And then we turn that into profit. So this is essentially where we get our return on our assets. And there can be both gains and drains on your profit. I won't go into too much detail today around this. As I mentioned, I'll dig a little deeper over the next few weeks. But so essentially the important thing here is that we have had an investment into the business that we have used to generate a good or a service or provide a service, which we have then created a profit when we have invoiced the customer. And then we have the cash. Now, it's really important to remember that cash and profit are not the same thing. Profit is an accounting term. It's designed to represent when you've generated the income, but not necessarily when you have received the cash into the bank. So there can be a real lag between those two things, and there can also be significant gains and drains on your cash flow. Now, again, I'll dig into that a little bit deeper in another session. But essentially, the important thing to recognize here is that we've invoiced the client. We don't necessarily recognize the cash at that point. It's not until they pay it into our bank account that we record it as cash received. And then from here, you've got two options, right? So you can either invest it back into the business, which will obviously allow you to then generate a further income, or we can take it out as drawings or do both. Now, there's many reasons why we might take it out as drawings. It could be that we need the money to live on, especially if we're not paying ourselves as shareholders, paying ourselves a salary through PAYE. Or on the other side of it, it might be that we want to invest into something else. So those are really the two options once we've received the cash into the bank. And the important thing here to remember is that the faster that we can get this cycle spinning, the higher our return on investment will be, right? So if we can become more efficient, and which leads to us essentially generating income faster, so using our assets and turning it into profit faster, and then we can then get the cash paid into our bank account faster from when we send the invoice out to the client. We then get that cash earlier to be able to either invest back into the business, in which case the cycle goes through again, or we take it out as drawings. And assuming that there's no restriction on the amount of customers that you can generate, the faster you can make the spin, obviously, the more profit you're going to make, and the more cash you're going to have in your bank account, and therefore the more you'll be able to take out of the business. So that's a very basic overview of how the Business 101 cycle works. Next time, what I'm going to do is I'm going to dig a little bit more deeper into the assets side, and how we can generate income, and what tools we can use to improve the amount of income that we're generating from our assets. So I look forward to you joining me. If you have any questions, feel free to get in touch or leave a comment in the comments section. Thanks, everyone.